Okay, so let's take a look at the work together problem for section 13-2 now that you've reviewed the slides. So our directions are on page number 386 in your textbook, and in your workbook you will need page 353. So let's take a look at the instructions. Payroll information taken from employee earnings records are given below. What you see in your book is the same thing that you see in your workbook. So this information is the same. So what they're asking us to do first is to calculate the federal unemployment taxes. Unemployment taxes are owed on the first $7,000 of earnings for each employee. So let me just take a quick second and explain that to you. So unemployment tax, whether it be federal or whether it be state, is put out there by your employer. The employee does not pay any unemployment taxes. So they pay tax on the first $7,000 that you make. The minute you earn $7,001, they no longer pay on that $1 or anything beyond that. So hopefully understanding that, let's get started. They're asking us to calculate the unemployment tax for federal, the unemployment tax for state, Social Security tax, again at the same rate of 6.2%, and Medicare tax at that same rate of 1.45%. So we're going to go through and we're just going to complete this grid right here. So they gave us the earnings for the current pay period. So Nick Ellis earned an additional $762.50. When we add that to what he has already earned, we see that he has not yet gone over his $7,000. So he is going to be charged tax on all $762.50 of his earnings. Now let's take a look at the next person, Evan P. Jennings. He has already made $7,980. So there is no need to pay any more tax on him for federal unemployment. So we're going to put a 0 here. Take a look at the next person. The next person, Virginia A. Powers, has already earned $4,380. This is her base for federal unemployment. Here is her current earnings. So she will be charged unemployment tax on all $527 earned because she did not yet go over or make more than $7,000. And the last person is Carrie T. Wolf. Prior earnings are $6,850. At this point, they had $150 more to go. So right now, they have earned on this current pay period $849.50. Adding this amount from this pay period to their prior accumulated earnings would bring them over $7,000. So they are only getting $150 of which needs to be paid for federal unemployment tax. Okay, so again, you're not going to go over the $7,000. This with $150 brings it up to the $7,000. So now we need to add these together, and when we do that, we get $3,179 for the earnings for the current pay period. For the federal unemployment tax, we are calculating $1,439.50. Okay, and now we're going to come over here and we're going to calculate for our Social Security. Remember that Social Security is 6.2%. So for Social Security and Medicare, we are using this amount right here. So when we multiply $3,179 by 6.2%, we get $197.10. With that same amount, we're going to multiply 1.45% times $3,179. We end up with $46.10. Unemployment taxes, we're going to be using this amount here. Okay, so I'll draw you a little arrow. We're using that amount. So when we take $1,439.50 and we multiply it by the federal rate of 0.8%, we end up with $11.52. That same amount, $1,439.50, multiply it by 5.4%, $77.73. So we're going to add up your total payroll taxes, and we end up with $332.45. So $332.45. So now your next task is to journalize the employer's payroll taxes for May 1st through 15th for the pay period on May 15th of the current year using journal page number 10, and it was put together on memorandum number 46. So again, this is page number 10. Notice we're starting on line number 7, so we're not at the very top of this. And so it is the 15th. Your transaction would read recorded employer payroll taxes expense. They would give you the full amount, which would be this number right here, for pay period ended May 15th. So what we're going to start with is payroll taxes expense. And your book told you that this is put out by a memorandum. So memorandum number 46. And it is a debit of $332.45. So that's where this comes from. You've got your credits now, so we need to indent. So Social Security tax payable. You have Medicare tax payable. You have unemployment, and you can abbreviate, unemployment tax payable, and the first one is federal, and you have unemployment tax payable state. Okay, now we're going to write our amounts in. Again, these all come from what you just calculated up on top. So $197.10 for Social Security. Medicare is $46.10. You've got your unemployment federal, $11.52. And finally, you have your unemployment state, and unemployment state was $77.73. Again, I want you to double check. Do your debits equal your credits? Okay, so check those. And what I'd like you to do for tomorrow is I'd like you to do your work together problem. In your workbook, it is on page number 353. And in your textbook, it is on page number 386. So that is the same page that we've been working on. Any questions? You can ask, you can email me, and I will get back to you. And I will see you tomorrow for the next lesson.